Hey guys, and welcome back to Road to Forex. So as you all know, risk management is one of, if not the most important thing in regards to your long-term trading success. So I'm going to go over that here today. A few things that you haven't thought of, a few things that you probably have, but I'm going to clarify them, and just making sure that you're setting yourself up or you're changing your risk management to make sure that you succeed. If you're not doing this, then there's no point in trading. It's really that important. Now, of course, I've been trading for 10 years. I've taught many students, multiple strategies, all of which work in the market. And many strategies that have failed and don't work in the market. So I'm using all of that experience here with you guys today. So what I want to go on about is really this key core, not idea, but principle. Losses hurt. Now I know that doesn't come as a shock or a surprise to anyone, but this is where a lot of newcomers, and look, even people that have been trading for 1-2 years and are still losing, they don't actually think about this because it's massive. What happens when losses hurt? Well, probably one of two things, right? When losses hurt, you make more mistakes. What could this look like? It could look like FOMO, it could look like revenge trading. Let me just get this back. Revenge trading. It could look like overtrading, etc. So many different things. So that's what the first thing that's going to happen is you're going to do this, or then you're going to lose, right? And you're just going to lose to quit. That's it. Really, this is what happens when losses hurt. And when you do this for long enough, it does lead to here, right? That's it. Essentially, you lose, you quit. That's what's going to be going on. You're not making any money, so of course, what are you going to have to do? You're going to have to give up eventually when it's not actually working for you. So when your losses hurt, you just start to make mistakes. So what should you really be doing, and how does this apply to risk to reward? It's really this. Hey guys, Editing Alex here. Just to make sure that you guys are subscribed, you're liking these videos, you're commenting on them if you have any questions. Again, you can join our free private Discord where you can get involved in the podcast, ask questions there, find trading buddies, etc. You can listen to my podcast and you can just get involved in the community as a whole. The link is in the description. Alright guys, back to the video. So I want us to look at this here on the screen. High/low win rate and number of trades, because this is what you want to be looking at when you are building a strategy to make sure that you are setting yourself up for the greatest chance of success. And it really is about win rate and number of trades. Not in itself the risk to reward. That comes later, but we will talk about it anyway. Now with a higher win rate, you're probably looking at a lower risk to reward. Probably. In the most part, you're looking at a lower risk to reward. It's easier to take a little chunk out of the market than it is a big chunk out of the market. As a whole, as a general rule. And again, a generalization there. But it makes sense. I might be trying to take out this. What essentially you're doing is you are removing all the trash from your game. If you're practicing to take a free throw, if you're practicing to drive at golf, if you're practicing to take a free kick, what are you doing? You're removing all the negative aspects of your game out. That is what you do. Oh, well, I step back too far, or I lean over the ball too much, or I don't swing back as much as I should. You are removing all of that, so you're only left with the good things. What happens to your strategy here is you go, well, actually at this time things don't work, but at this time it does, so I'm only going to do this. Oh, but at this time, when a candlestick looks like this, that's when it does, and so on and so forth. So generally, this is what happens. Now, there are particular ones where you can actually get more trades and they go for very, very little, maybe even 0.30%, and they're just taking little bites out of the market. That can happen, but I see this more often than not. So that's why I'm doing it, right? Again, just so that you can come out there and you can apply it. Because if you're looking for a 90% win rate, well, one, it's probably not really out there. You'd be thinking if it's 90%, all the top hedge funds, Warren Buffett, all those guys would be using, they'd all be buying the same things, doing the same things because, whoa, it's a 90% win rate and you're killing it. That's not to say they're not out there, but is that reasonable for someone that's just starting off and already struggles to deal with losses? No, it's probably not. Is 70% good? Yeah. Is 60 to 70 probably around that area? And I'd probably be pushing closer to 70. Then yeah, definitely. That's in there. But what I like with this, with the low number of trades, is even though you can hit 2 to 3 back-to-back losses, which can definitely happen. You flip a coin, it's got 50-50 heads or tails. You could still go 5 or 6 tails in a row. I'm sure you've done it with your siblings or your friends when you're at school and you flipped it, and that was your first law of probabilities. Even though it's a 50%, you have to actually trade it over a very long period of time, aka a very long period of flips, in order to get that 50%. It doesn't just go tails, heads, tails, heads. You can go head, head, heads, tails, tails, head, tails, head, 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 tails, 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 heads. Right? That's what can happen. So this is really good, because even though you can have 2 to 3 back-to-back losses, it's less likely, and you have a longer period of time to reset. Say you only take 1 to 2 trades per session. Yes, you can be going, oh, well, I want to make more trades and I want to make money quicker. And if that's so, hey, don't watch the channel. Just leave, because I don't want to work with you and I want nothing to do with you. I'm being genuinely serious. Like, this game, how many people do you see just smashing it within a couple of months? You don't. 90% loss rate in terms of all traders coming into the market. 90%. If you go on, oh gosh, can't remember what it was. It wasn't FTMO, it wasn't the Fivers. Can't remember, it was another brand. TFT, I believe it was. And they said out of all the people that passed their challenges, which was like 85% of people fail, it was another 80% on top of that have lost their account within the first year. So not only is passing your first challenge incredibly hard, but then you're a percentage of a percentage if you've got it even a year later. You're in like a top 1%. Right? That's really what you're looking at. The maths might not math properly there, but you get it? So if you're able to lose and then sit back and go, okay, I can reset, I can do this, having the loss isn't that bad, I'm going to take some time off, I'm going to go for a walk, I'm going to do my things, and I'm going to come back the next day or in the rest of the session. You can go, okay, cool. Then you have time to recuperate. If you're going for lower win rates, a higher risk to reward, because of course you need them, you're winning less, so you need a higher risk to reward. Because again, you're winning less, you need to make more, you're probably going to have more trades. This is where everyone goes wrong. This is where everyone goes wrong. More trades equals more success, equals more money, equals more losses. You struggle with losses, not with winning. You struggle with losses. You hate losing. Losing forces you to revenge trade, FOMO, overtrade, all these things that we talked about. That's your problem. That's what you want to get over. That's what you want to get around. So, get a higher win rate, cut down all the crap, and be like a sports professional. Remove it all. So when that time does come, and you get that guy that needs that perfect drive, or needs that perfect free kick, or it comes to the 3 or 4 times a game where you're shooting free throws, or maybe even less, you're there and you're prepared, right? They're not shooting free throws all game. That's not what they do. They're not driving every single hole. They probably are driving. But you get what I mean? You prepare for when crap hits the fan. And when it does, you're going to be okay. Because those losses aren't going to seem as big, because the time between them is larger, you have more time to prepare, you cut out all the crap in your game, and you know that this loss here, 2 to 3 back-to-back, is less likely. Less trades, higher win rate. That's what you want to be going for in terms of your risk to reward. Anyway, guys, that's probably it from me. I hope you have enjoyed this, and I'll speak to you in a later one.